Let's go over a trading strategy using the relative strength index, also known as the RSI, that can help you get into profitable swing trades. We'll recap 3 trades that I posted that were profitable using this strategy to help you understand why I got into these trades, what I'm looking for, and how to execute these trades. If you want to be notified on the next trades that I get into, you can join the Discord server. A link is provided down below. You get access through the Patreon. So let's quickly look at the 3 charts. The first one right here is Alibaba stock, trades under ticker symbol BABA. Take a look at the charts. These are the daily candles, and take a look at the RSI and where it is. That vertical line, that green vertical line you see there, is when I entered into the trade. Keep that in mind. Here's the other trade, Peloton, ticker symbol PTON. Same chart, the daily candles, looking at the RSI, and that vertical line is when I entered into the trade. Keep that in mind. Here's another stock, another trade that we got into, HIMS, ticker symbol HIMS. Daily candles, look at the RSI, that vertical line is when I got into the trade. And here are the results. The Alibaba trade, 417% gains on that swing trade alone. That HIMS trade, I bought it for $10 a contract. I was able to sell it for $95 a contract. So 950% gains off of that trade. And then here we go. This is when I bought the Peloton trade. I bought it for $220 a contract. And as you can see right now, it's trading at $480 a contract. So roughly 100% gains in that trade alone. This position is still open. All right, let's go over these 3 trades in a little bit more detail. So the first one we're going to look at is Alibaba. And we're going to dive into them all on the daily chart. And we are using Webull. If you want to sign up with Webull, use the affiliate link. If you deposit $100, you'll see a very nice reward. I'll post up the current promotion on the screen so you can see. I think you get 12 free stocks valued anywhere from $3 to $3,000 per stock. So check out the affiliate link down below in the video description. All right, let's dive into this Alibaba trade in a little bit more detail. So obviously this video is regarding relative strength index. So we use the RSI to help us get into a trade as a signal. We also use price action, and on the daily candles is what I prefer to use. So let me just tell you the story behind this trade and why I got into it. And this story is going to be pretty much the same for the 2 other trades as well. So we're looking for stocks that are overbought on the RSI. Now that's not the only indicator, because a lot of the times I will actually like to go long a stock that is overbought on the RSI for a swing trade. And then eventually I will go short once it becomes too overextended. But just because the stocks hit 70 on the RSI doesn't mean it's a short. What happens beforehand is important, or at least I believe is important, because that will help assign some probability that the stock is either going to continue higher or lower, in my personal opinion. So all of these 3 trades have similar setups. Before they reach 70 on the RSI, why did they get to 70 on the RSI? Is it some kind of catalyst that shot them higher and that's why they breached 70? Or is it continued momentum and strong price action? We're going short these trades, so it's not continued momentum. It is not strong price action. It's a catalyst that shot them up there really quickly, and we're looking for it to pull back, maybe retest a gap. So Alibaba had news and it shot up right here, as you can see by this gap right here. It went from $85 to 90 something dollars in that gap up. And then it continued higher for a little bit and it broke 70 on the RSI, indicating that it was overbought. We don't get into the trade at that point. It pulls back a little bit, it retests it, and then it had a big down day. That's when we got into the trade. Now, maybe I was a little too aggressive, because when I did get into the trade, as you can see by this line here, eventually the trade went against me and the stock retested $99, $100 a share. And I was down 40, 50% on that options trade at that point. Now, you might panic. I don't panic because I get into high risk to reward trades, and I'm willing to lose it all because the potential rewards on these trades are 9x, 10x in most cases. That's the risk profile that I look for. And then eventually the stock did fall, and as you can see, we made over 400% on that trade. And that happened over a couple of weeks. So we looked for a stock that gapped up off of some kind of catalyst, some kind of news that drove the share price higher, broke 70, went lower, retested it somewhat, and then ultimately fell. That's what happened with Alibaba, and that's basically the story between all three of these trades. So let's go on to the next one, which we currently still have open, and this is Peloton. So let's look at Peloton. Same kind of story here. You can see when I entered into this trade, it was a couple days after earnings. What did earnings do? It sent the stock higher. That move to the upside off of that catalyst made the stock be overbought. Then it pulled back a little bit. It stayed there for a little bit, and then we got into the trade. We went short the stock again, very similar setup, and we held the stock for a long time. This was a multi-month, I'm still in the position, swing trade to the downside because I also think the fundamentals are very poor for Peloton. I don't like the balance sheet, so there's some more fundamental analysis that went into this trade outside of just technicals. But if you were to just play the technicals, the RSI in this case, the way that it signaled, that was an indication to me to go short Peloton, and the trade has worked out pretty well. I'm up around 100% on that trade. Now let's go over the next trade, which is HIMS. Now this trade is a very similar setup to the other two as well. We had earnings, it sent the stock higher, and as you can see on the RSI down here, we're above 70. So we use price action, a catalyst, and the RSI to show us that the stock is overbought, and it's because of that catalyst that we think the stock is actually going to move lower because it's not sustained price action to the upside. This stock ultimately did fall, but then it did rebound. So we closed out of this position, and this was the best one of the group because it was a shorter term swing trade, and we actually timed it just right that we were able to close out for basically $95 a contract when we bought the contract at $10. So if I bought 10 contracts at $10, that's $100. I would then be able to sell that for $950. That's how we got into this trade. That's the risk profile that we're looking for on these swing trades using RSI and options to our advantage. Now I want to show you the opposite because a lot of the trades we went short when the RSI was above 70, but sometimes we will actually go long, and it really depends on price action that got us there. So in this case, we went long McDonald's. We posted on the Patreon. It was a really good trade. And as you can see with McDonald's, the price action, when we broke 70 on the RSI, which was right here, you can see that there was no earnings event, no real news, no real gap up. We just had strong price action. Many days in the green, the stock just kind of continued higher. That is an indication to go long this stock because it can remain overbought for quite some time. Momentum is very strong, and when you see momentum that is supported by strong price action, that is not propped up by some kind of event or catalyst, you can see the stock moving much higher. Now we ultimately closed out of this position because things can change quickly, and I didn't want to have to hold the position through earnings, but as you can see, the stock is still moving higher because there's a lot of strong momentum to the upside in McDonald's stock right now. At some point, this is going to change. The stock is overvalued, and fundamentals do not support such a rise in such a quick time frame. But that point could be months down the road, and the stock could become even higher, more expensive, until ultimately you start to see people taking profit. Now I want to explain in theory why shorting a stock that's overbought on the RSI after a catalyst, after an earnings event or some kind of big news event, it tends to work out. Now, no trade is guaranteed. We're always looking at we're always just gauging and measuring risk to reward and laws of probabilities. But a lot of the times stocks actually pull back and retest gaps because technically when there is a gap, a lot of times it gets retested. But why is that? What's the psychology behind that? Why does that happen? Well, it's because people who buy stocks off of earnings, traders who get into positions off of some kind of news event are not investors. They are traders. They are impatient. and you see an influx of buyers that shoot the share price higher. People are just bidding on that stock. They want to get in. They have FOMO. They want to get in a trade. They think it's going to go much higher. And then once those buyers all have gotten into the position, there's no new buyers because investors are not buying stocks off of what happened off of one earnings report. And when they see it shoot up, they're like, well, I'm patient, I'll wait. So eventually that momentum dies very quickly and you start to see the stock fall. Well, those short-term traders, those short-term buyers are then selling their position. They have a tight stop loss and it sends the stock lower until eventually it retests that gap. And then you actually start to see some investors come in and say, all right, let's reevaluate the stock. It had great earnings. Maybe we'll readjust our analysis on it. And basically we're buying it at the price before the earnings report. So we're not buying into something that's been elevated off of it. So maybe it's an attractive buy. Technical traders also get in saying, oh, well, it's at support. It's due for a bounce. And the fundamentals look good as well. So let me get into the trade. And then you can see the stock kind of make a return to where it should be if it had strong earnings. It's that combination of short-term traders getting in based off of FOMO, and then all of the traders coming in and there not being any more buyers sends the price lower until ultimately it becomes attractive to investors and new traders or more experienced traders. That's the psychology of why this strategy works in particular. But essentially now you know one strategy, one way to use RSI to help you get into trades. I'll make more videos because the RSI is a very strong indicator and can be used multiple ways, and I'll go over other trade examples as well. But that wraps it up for this video. I thank you so much for your time. Definitely consider subscribing to the channel if you want more content regarding investing and trading in the markets. And like I said, if you want live trade alerts, if you want to join the community of other traders where we talk the stock market every single day, we post our trades, we post our ideas. There is a news channel. It's just a great community to be a part of. You can do so by you can join that community by joining the Patreon, which will give you access to that Discord server. It's been real, it's been fun, it's been real fun, and this is We Are Investing, and I'm out. See ya.